This is the briefing for Friday, June 6th. Well, in today's trading, we had a slight new high, gapping above yesterday's close. And then we just had a pause for the rest of the day, and the market remained in rotation. As you can see, this is a 60-minute chart of the spiders. You can see the gap up and the rotation that we saw today for the balance of the day. This is the Qs on a 60-minute basis, the gap up and rotation for the rest of the day. And this is the IWM on a gap up and rotation for the rest of the day. Now, the important thing here is not the fact that we gapped up and we paused, but the fact that we are trading above important short-term support levels right now. You can see this 595 level in the spiders that we traded through and closed below yesterday was negated in today's trading, and you can see that we closed above the 595 level. Now, also, as some of you longer-term subscribers know, that these pause areas give us opportunities for good trade location. So while we're above and holding above 595, trading above the high of today, which comes in right around the 600 level, would then suggest a potential extension of this breakout above 595, and certainly you want to be long. I would be cautious about being short below today's low because the next level of a very important support is 595. But if that's broken, then potentially we could see another rotation back through this range. But I would watch what happens at or near yesterday's low. Same thing with the Qs. You can see the rotational pattern. You want to be long above about the 531.50 area. And then potentially it's a little more extended up than the spiders. So there's a little better risk-reward relationship. Might be bitter anyway. So looking to be short maybe about 520, keeping in mind that support comes in at the 522 area. Now, the most important thing here, and I talked about it in last night's briefing, was the IWM and how it was lagging, and that if it were to catch up or trade above 210, that would be a potentially significant event and suggest that the majority of stocks are beginning to participate in this rally as opposed to not participating. And you can see we traded above, opened above 210, spent the rest of the day in rotation, and certainly this level of support at 210 is going to be very, very important. But I'm going to look to be long the IWM on Monday above today's high around the 212 area. I think that's going to be a pretty significant potential move, and it has the potential to move in a much farther direction from a price range perspective than the other two indices, since it was lagging. And when the speculators come in, if they feel that the market is undervalued and we are going higher, then potentially the Russell has the potential for the greater degree move. Then also, I want to point out here the fact that I guess I can go to the daily charts, but you can see this is S&P breadth. You can see that better than 50%, about 60% of stocks in the S&P were trading higher above to lower, 1,800 in the NASDAQ, and 1,300 in the Russell were trading higher as opposed to lower. So breadth strengthened slightly in today's trading. Looking at a daily chart, now you can see this was the trend, and this was what was concerning me greatly previously with this rally, that market breadth, the number of stocks trading higher as opposed to lower, was declining even though price was moving higher, and that's basically unsustainable. But you can see now it looks like these divergences are getting ready to be eliminated, which would be a significant event. 52-week highs minus 52-week lows increased slightly in today's trading at 191 shares. That's a positive number. Volume in the spiders was down slightly, but I'll get to total volume, which I think is going to be more relevant at this point in time. Volume down in the Qs as well, and you can see in market breadth in the NASDAQ, you can see that the divergences are in the process of being eliminated also as we did this breakout move above this 522, 523 area also. And in the IWM, you can see this was the rotational pattern that it was in. and we broke above 210. Next level of resistance is going to come in at the 214, 215 level. Now, I don't have the time right now to get into it, and I would potentially have to do it in a trade lesson. But breaking through 215 in the Russell is and could be a significant event, because this is the area of rotation that it's been in for quite some time before breaking down. We got this pause, then another breakdown, and then of course this rally, and then a pause. Breaking above this 214, 215 area is going to put the Russell, I should say the IWM, back in this area of rotation and open up the potential to go from 215 up to about the 250 level, which would be the all-time highs, 244, 245 level as well. Breadth increasing in the Russell, looking strong. So it was a very positive day in today's trading. Now, in terms of overbought and oversold, you can see that we are approaching an overbought condition, and this is the NYSE and this is the NASDAQ. But I still think that the market has some potential to go higher, even though the NASDAQ looks like it's getting to an extreme overbought condition at this point in time. Now, I want to talk about the metals trade, the silver trade. Last Friday, I talked about this trade, about how, and I've talked about it all week, how this was an area of rotation in one time frame. This was an area of rotation in another time near the upper extreme of this area of rotation. Then we had this area of rotation in another time frame at the upper extreme of this area of rotation, and up at the upper extreme of this area of rotation. So I went in on Friday of last week and I bought silver. This is SLV. I think that was Friday, 2, 3, 4, 5. Yeah, so it was 5 trading days. This was Thursday. I did that. And then we opened up on Friday just above this 30-50 area, and you can see that the buying tail here almost touched the 30-50 area, and it gave it a great opportunity to buy on that day, driving all the way up to the 3150 area, which is the upper extreme of this area of rotation. And I said in the briefings that if we break through this area, that silver has the potential to run and be potentially a very good trade. So you can see we spent 2 days of rotation at or near this upper extreme, which is typical, and I discussed that in the briefing about how traders know where these key reference areas are. When they reach a key reference area, they step back to see if there's enough strength in the market to have a breakout move, and certainly yesterday's trading, we did have a breakout move and gapped up and ran for quite a while for most of the day. Volume increasing as well. Now, with full disclosure, I exited my trade after this move. I figured that there would potentially be a pause, and I wanted to see how that pause developed. But you can see we even got a follow-through move in today's trading as well. So it's going to be interesting. If we do get a pause, it's going to be interesting to see how that develops, because it may offer another opportunity for long positions and give us an opportunity for a good trade location. So what happens the first part of next week on this silver trade is going to be interesting, but for all intents and purposes, I got out of that trade yesterday and booked a nice profit on it. It's going to be a very interesting beginning to next week. Certainly the market is still being moved by news events, which makes it developing a strategy very, very difficult. But anyway, we'll keep up the work and see what happens the first part of next week. Have a great weekend. I'll pick this back up on Monday for subscribers.